Alrighty, folks, let's have a conversation about 2025 and some housing forecasts. When we go through the forecast from Zillow, Realtor, and Redfin, I'm going to ask you to pay attention to what is similar and what is different. And then at the end of this conversation on these three forecasts, we'll talk about what you and I have been talking about daily for a couple of weeks. We will also have a conversation about the latest and greatest Fed statements. We will talk about the ADP jobs report. We will talk about mortgage applications. And we will talk about something Deutsche Bank's chief economist had to say about the U.S. housing market. So let's get into it, folks. Let's talk about Zillow first. Zillow's housing market forecast starts with price. Zillow expects the U.S. housing market, again, median home price to go up 2.6% in 2025. They expect transactions to go up pretty healthy amount from roughly 4 million to 4.3. They do expect the buyer's market, which currently, according to them, exists in the Southeast, to actually roll over to the Southwest. Also, they highlighted that the trend towards smaller homes will continue. Realtor.com. Realtor.com says home prices will go up 3.7%, a full percentage point higher than Zillow. They do expect transactions to go up 1.5%. So if we call it 4 million, I don't know, what's that, like less than 4.1, so very moderate increase. They do expect rents. Realtor talked about rents to be negative 0.1%. They do expect rates to stay north of 6%. The biggest call for Realtor.com was active inventory would continue to build. They talked about active inventory jumping an impressive 11.7%, and housing starts to go up 13.8%. Active inventory, if it went up another 11%, I actually think about days on market, right? Days on market would move up pretty well. So let's close it out with what Redfin says about the 2025 housing market. Then we will talk about where I see some differences so you can hold me accountable, and you can always ask yourself what is going on in your area. So Redfin, the most rosy and optimistic view on home prices. They call for home prices to go up 4%. They did highlight that they expect mortgage rates to average 6.8% in 2025. They had a pretty wide expectations for transactions. They estimated somewhere between 4.1 and 4.4. I don't know. Redfin, that feels kind of lazy to me. Pick a number. They're not going to hold you to it anyway. Don't pick these ranges. They did expect rental affordability to improve, which what does that mean? Lower rents, maybe higher income, maybe both. And most importantly, kind of a call out in Redfin's is they actually expect home building, single family home building, to increase substantially in 2025 because of deregulation. If you make it easier and cheaper to build, guess what? Builders build. Alrighty, folks. So those are the three forecasts I have got. I look forward to having a conversation with Lance Lambert later in the week. I'm sure he has more. But let's talk about price, transactions, and then the subtle differences between each and every forecast. Right now, the forecast range from Zillow of 2.6 to Redfin at 4. I actually think it might be lower than that. I'm actually thinking a little bit like sub 2%. Again, I have been hopeful for years now, and if you've been with me for a long time, you know that home prices just are flat, relatively speaking. And if we could stay at inflation, which is call it 2%, I think that would be good. We need to heal the housing market. The housing market is broken, and we need time to fix it. Next up, transactions. All of them, and maybe it's talking their book, forecast for transactions to go up. Now, that is absolutely possible. Some of that will rely on mortgage rates, right? If mortgage rates fall to 6%, for example, there's undoubtedly no question transactions will go up. I am still holding to the fact that I think 2025 will be the cycle low for transactions. So I believe we will have a 3 handle. If 2024 goes down as 4 million, I think 2025 will be like 3.8, 3.9. Again, I expect much, much, much better things in 26. But again, historically speaking, reviewing the 54-year spreadsheet, which we give away for free at onerentalatatime.com, tells me that we need 4 years to get to the bottom. I would ask you again to go look at 1978 to 1982. I think there's a lot of similarities between, 2022 and or 2021 and 2025. I think the Fed in both cases went on a ripping, of raising rates. So again, I think there's some historical context that we would be fools to miss. And then let's talk about kind of the subtleties and oddities. Again, I like the fact that Zillow highlighted smaller homes. Again, as we talked at Resi Day in New York, when I was asked how to fix the housing if I could, have a magic wand, it is smaller homes. I don't think we've had a concerted effort building smaller homes since the 70s. I think we need that. Now, maybe that ties in with what Redfin said about home builder building more homes because of deregulation. Wouldn't it be nice if we deregulated home building, we incentivized smaller entry-level housing? Wouldn't that be a good thing? I think that would not only be a good thing now, but it would be a good thing for generations to come. If we don't fix the inventory problem of smaller homes, this could be generational impacts. There's nothing for entry-level home buyers to buy. And the stuff they can buy is getting older and older and older. Alrighty, folks, I want to give a shout out to Clear Value Tax. I don't know if you watch Clear Value Tax, but he has a monster YouTube channel. I actually saw the other day on X or Twitter that Clear Value Tax applied to Elon Musk and Vivek Ramaswamy, hopefully I got that right, to work at DOGE, Department of Government Efficiencies. And lo and behold, Vivek replied saying, we will look into it, folks. I think it's amazing that just YouTubers such as myself could reach out to these luminaries, offer service, and get a response. Want to shout out Clear Value Tax for making that leap, showing us what's possible. I look forward to hearing more about Doge from his perspective. So kudos to him. Mortgage applications. This again warrants a conversation, I think. Mortgage applications to purchase jumped 6%. This is the highest level since January. Think about that. Seriously, think about that. It's December. Like December. We have mortgage rates roughly 7%. But for some reason, we have just hit the highest level of mortgage applications since January. Now, what could that mean? Well, it could mean that people really were waiting for the election. We talked about it for seemingly 8 weeks. People are waiting post-election. So maybe that demand that was delayed is not truly destroyed. Maybe they are executing on said thing. Second, and I think this is probably also a contributor, if not meaningful contributor. I think home buyers, right? Mortgage applications to purchase, home buyers have gotten used to 7%. And that's a meaningful change. If we go back earlier in the year or last year, everybody was always like, I'll wait. And if you've been paying attention, waiting has cost you money. I don't know what's going on. I really think it's odd. I mean, it's like odd that we hit a similar mortgage peak since January, right? The rolling into the spring selling season. So I don't know. I'm going to call this just a blip, data noise until the trend line continues, but it was certainly interesting. Let's talk about, excuse me. Let me take a sip of coffee. Let's talk about what the Fed is saying, because we got a lot of Fed talk in the last 24 hours. Who should we start with? Let's start with Barkin, Fed President Barkin. If inflation is high in Q1, it would signal we have a lot of more work to do. What is he really telling us there? He's telling us that the Fed has looked at the lag effect of inflation. They expect it to fall naturally. Again, we talk about this almost every Sunday with Dan Bird. They look at the same data that we look at together, and this thing called the base effect will be very, very helpful to inflation in Q1. And it's very likely, again, mathematically, it's not certain, but certainly possible, inflation could go below 2% in the April or May timeframe. And I think Fed President Barkin is saying, hey, if that doesn't happen, we got a problem. Next, he says he's encouraged where inflation is headed. Again, I think he's telling us, hey, we see what's coming. We're in a good spot. And then lastly, we want a somewhat restrictive policy. So that's a little bit of a change. Again, people have been talking about getting neutral and all of that. He's like, hey, we need to be somewhat restrictive. How about Fed President Musselman? I think I have to hear his name pronounced. I don't know how to say that. Musselman? Something like that. Inflation has been higher than desired. No kidding. He worries about the job market. We get a big jobs number on Friday. I'll tell you about the ADP report in a minute. It's possible to pause cuts at upcoming meetings. Could he be setting up the December pause? Not sure. Time may be coming to slow or pause rate cuts. We're going to jump into what Deutsche Bank chief U.S. economist Matthew Lazzetti, something like that. He had to say. First, he says the Fed will cut in December. Okay, seems to be what the market thinks. I think last time I checked, it was a 70% chance. And here you go, folks. I told you this was coming. According to Matthew Lazzetti, no rate cuts in 2025. I told you I thought that would be coming 3 or 4 weeks ago. I told you that I thought, you know what, we'll probably get the December cut. They'll be down 100 basis points. And I said, watch out, folks. No rate cuts in 2025. Certainly, I don't see any rate cuts in the first half. And depending what happens to inflation in the job market after that, we will see about the second half. But yes, according to him, no rate cuts in 25. Essentially, the economy is strong. Inflation impact from policies, consumer strength, and better than expected jobs data. Last point, again, we've talked about this a lot. We wanted to shout out Michelle Bowman when she was the first to talk about it. The neutral rate is moving closer and closer to 4%. I think, again, we have been there as a channel for a little while now. So, again, it is interesting to hear the chief U.S. economist at Deutsche Bank kind of echo what you and I have been talking about for 6 to 8 weeks. Let's talk about some earnings. But before we do that, I do want to have a shout out to the school community. Unfortunately, no one joined our school community yesterday. That's okay. It happens. But we do have 104 folks on our school community map. Yes, if you go on your desktop, you look in the upper right-hand corner, there's a map function you can click on and add yourself. If you are a part of school, which is about 350 of you, go to the map. If you haven't already, add yourself. Don't add your home address. Let's not be silly. Let's add a Starbucks, a McDonald's, something near you so that you can encourage networking with other members around you. And don't forget, we have 3 accountability groups. We have a Ladies of ORAT Mastermind, a Unicorn Agent one as well. Also, I am looking for leaders to possibly take on out-of-state investing and short-term and medium-term rentals. I think if we had 2 more accountability groups, we could finish up the week. And I think adding out-of-state and short-term and medium-term rentals would be an awesome addition to the family. And again, Two topics that I cannot help on. I don't do out of state, and I don't do short-term and medium-term rentals. So if you're in the school community and you think you can help with that, let us know. I would love to see that happen. Let's talk about the ADP report. This is the second of three jobs numbers. Again, we got JOLTS report yesterday, better than expected. Quits rate up, better than expected. ADP report last month, 184,000. This month was estimated to be 163. Reality, 146. So a much, much weaker number. If you dig into the ADP report, you saw that education and health services up 50,000. Construction, didn't see this coming. Construction up 30,000. Manufacturing, negative 26,000. The good news is the ADP report highlighted wage growth. Wage growth was quite strong at 4.8%. The big number is Friday jobs report. Again, remember last month was 12,000. It is fully expected. We're going to see a snapback. You're going to get the 50,000 folks from Boeing. You're going to get some stuff in the South. So it is expected that Friday's number will be 214,000. I'm actually most interested in the revisions. I'll be curious if last month is revised negative. Again, it currently sits at plus 12,000. We did have some interesting earnings come in. Most of them good, one of them horrible. We'll get to the horrible one last. Dollar Tree beat top line and bottom line. Again, better numbers at Dollar Tree. We had some tech companies just crush it. Okta earnings beat with strong guidance. Salesforce earnings beat with strong guidance. Marvell earnings beat with strong guidance. One of the things that I start to think about when I see these earnings, these tech companies is, did we go through, this rolling recession? If you listen to David Sachs from the All In podcast, the kind of SaaS providers, SaaS, software as a service technology providers, already went through a recession a la Salesforce. Maybe the rolling recession is getting legs and you're seeing the SaaS and tech companies, ex Big Seven come out of it. I don't know. It's an interesting thought. Now for the nasty, nasty earnings, Foot Locker. Ooh. Foot Locker had a massive miss and gave some very weak guidance. Yeah, I think that's what I got for today. Don't forget, folks, join or buy your tickets to our event in Vegas. You are 73 days away. 73 days away from probably the most consequential event of the year. You're going to be around hundreds of other investors doing exactly what you want to do. You're going to be around other experts who will be there and take your questions. How many times have you gone to an event where you can line up and ask questions of every speaker? My events are different. There will be no one selling anything. They are there to give and there to share. You will get 6 hours of networking. And again, unlike last year, I will be feeding everyone to maximize your networking time. Do me a favor, folks. Go to Eventbrite. You can just search One Rental at a Time. Get your tickets, book your hotels, get your flights, start networking with folks, making plans to be there. I hope to see all of you there. And if you have a book, bring it. I'd love to autograph it, take some pictures, and have a good time. So, folks, have an amazing day. Like, subscribe, comment. This is the Daily Financial News. Later.